All right. Well, welcome everyone. We are getting ready to start our webinar here on NIL and taxes. We're going to pause for just a moment, let people in, but I wanted to make sure as people were signing in, we got a chance to welcome everyone. One thing that I want to make sure everyone knows, we'll touch on this a couple of times. We're open to questions. Please ask questions as we go along. There is, if you'll look at the bottom section of your screen, there's a Q&A tab. If you have questions, we would ask that you put them in the Q&A tab. It will help us make sure we cover it. That's a better spot than just putting it straight into the chat. So that's one housekeeping thing that I wanted to make sure we covered. We've got a few more people we're expecting, so we're gonna wait just a moment here to try and allow everyone into the room. All right, while we're waiting for people to join here, Kelsey, we have a great question just to start off with. So thank you for the question in the chat. And the question was, will there be access to the recording following the webinar? So I thought that would be a good one to just go ahead. And the answer, Kelsey, is
Yes. Yep,
yes.
we're
We
recording this, and as soon as we're finished up, we'll get it out to everybody that attended or those who weren't able to make it as well.
So Matthew, thanks for the great question. All right, wait about one more minute here and then we will get started. Want to try and make sure everyone gets a chance to get in. All right, well, in the interest of everyone's time, we'll go ahead and get started. What we wanted to kind of start out with was because it's so critical to the approach, at least that we take to NIL, working with athletes, working with their other professionals. The why we do it is really important and kind of how we got into it. So wanted to start with that. Several years ago, when NIL really first came to be, Anne Marie, who's on the call here, she's the COO of our firm, uh, was having a conversation and thinking about, wow, this is a huge new change in the landscape of college athletes. A lot of opportunities. There's going to be a lot of great things that come out of this. But then she got to thinking, what kind of expertise are these athletes now going to be given? What kind of knowledge are we going to be able to help them? Are they going to have resources to handle the tax implications and those things? Because there's going to be a lot of money coming their way. But then what's going to happen at that point? Are they going to know what to do tax wise? Are they going to get in trouble? Is it going to be 3 years later and the IRS comes knocking? These kinds of things. So I started out with a conversation with Anne Marie, and it developed into really the opportunity to say, you know what, we really want to be a resource. We want to help young men and women who are coming into money, who are working hard, who are earning this. Their hard work is converting into dollars and really helping them keep those dollars, pay as little tax as possible, stay compliant, all of those kinds of things. So that was really the heart behind how we got started. And so what we're going to do, in walking through the webinar today, we're going to watch a quick video here to get going. Then I'm going to come back on. I'm going to introduce our panelists, and then we'll go over kind of the agenda for today. and then get right into the meat of things. So if we want to go ahead and kick off the video, Kelsey, that would be great.
Sorry.
20. When you're 55, how much money you gonna have left?
Know an NIL athlete. If you are an NIL athlete, pay attention to this stuff because you deserve to get the credit for all your hard work.
Athletes need to be looking out for.
He or she is, guess what, a small business and a small business. So having the right advisor to assist them in kind of navigating what's best is going to be crucial. So
we've entered a new day, an age in college sports. Protect all that you have earned. The Anthem way.
All right. So with us today, the panelists, starting off, we've got Zach Hattify. He is one of our senior tax managers that does a lot of work in this space, does a lot of work in the multi-state realm as well. He's one of our lead panelists. Also, Tyler Coates is joining us. He works closely alongside Zach. Tyler himself was a college athlete as well, and so college football player. So that's one of the things that makes him a natural for this. Then, as I said a little bit in our intro, we have Anne Marie, who's our COO, really helps keep her pulse on what's happening overall in the world of NIL from a compliance, legislation, connectivity standpoint. We've got Kelsey and Sarah, who's our amazing team who put together the slides and the materials that we're going to be going through. And then myself, I'm one of the partners here at Anthem. And so the agenda that we're going to be going through today is we're going to be going through kind of a quick overview of the industry. We're going to hit on what are the tax pieces of things. We're going to focus on why work with a professional, and it's not just work with someone on the tax side. There's a number of different professionals that are really key in this environment. We're going to go through a case study, and then we're going to do a Q&A. And as I mentioned earlier, I'll mention it again because we have a few people who have joined since we started. At the bottom of your screen, if you have questions, there is a Q&A tab. If you can put the questions in that Q&A tab rather than in the chat, it will really help us make sure that we catch everything and that we answer those questions at the end. So to start with, Tyler, why don't you kind of walk through your start?
Yeah, I'd be happy to. Well, as we all know, the NIL industry is new over the last 3 or 4 years, rapidly increasing, growing, and also highly unregulated, which the expected industry is expected to be valued at about $1.6 billion. And those dollars are in the hands of anywhere from 18 to 20-year-olds predominantly, maybe even down into the high school level, who are athletes that have never had income before, let alone this substantial amount of income. So the important piece of this to us is connecting with these athletes at a younger age, planting that seed, educating them, and really being their first point of contact when they receive a substantial amount of income. And there's no signs of slowing down in the NIL industry, as we know. Predominantly, athletes have received their income through third-party collectives. But here recently, coming up soon, athletes will be receiving profit sharing from universities, which will be a whole nother source of income and maybe a more steady stream of income, in my opinion. You know, predominantly the income is earned fr from football in college athletics, but there's other, basketball is a big source of revenue, income for NIL, and that's where a lot of the earnings are flowing down to the athletes. Predominantly football players are who are receiving a big chunk of the NIL income, but we're seeing a good increase in men and women's basketball over the years. It's pretty common we hear professional athletes are mismanaging their income. I've heard multiple times a professional athlete I've always looked up to growing up has maybe gone bankrupt or no longer has some of their income, which, is obviously something that we can avoid and we can help with NIL athletes because we're talking to them when they're 18 or 20, maybe before they receive their first professional contract. And we're able to give tax advice and we'll always be able to take care of the compliance piece. But the nice thing about Anthem is we have a wealth management department where we can take our clients to Derek, a financial advisor of ours who works with Ameriprise, and he can do the financial advising that Zach, Tyson, and myself maybe not be able to do. And then we also have legal attorneys that we can send our clients to. I'm not able to give legal advice, but we'd like to assist our clients in giving them a resource that we feel comfortable giving advice to these athletes. Just like myself, any other employed individual or business owner, if you don't pay your tax, the IRS and the state, potentially a state like Tyson mentioned, are going to come knocking. We found that NIL athletes are subject to what's called duty day reporting, which requires an athlete to report their income to multiple states based off of the amount of days that they spent in that state and potentially city if there's city tax. So, we really want to make sure clients understand the matching reporting of if you receive a 1099, the IRS is also going to receive a 1099. And so we want to make sure clients understand that, and we report all of the 1099s that an athlete's receiving. You may receive a 1099 from a collective, but you may also receive a 1099 from another sponsor. And it's important that we report all of the 1099s and properly record all of our income, because as an independent contractor, which is an NIL athlete, you don't have withholdings out of your paychecks like a normal employee would. So it's important that we educate them on that, get them up to speed on estimated tax payments to avoid some underpayment penalties. A big misunderstanding in the NIL space is that athletes are subject to state income tax, and more than just the state that they live in. I recently heard an NIL athlete say, hey, I heard I could register my LLC in Florida, even though I live in Oregon, so I don't have to pay any state income tax. Like, can we do that? And that's not the case. Like I mentioned earlier, we have to allocate our income based off of the states and cities that we play in. So making sure that athletes file all their state and city filings is just as important as filing the federal tax return. Our main focus is educating. Oh, can we go back to that slide, please? Our main focus is educating our clients, and there at the bottom, it mentions if you have $1 million of income, your marginal tax rate is 37%. And what that means is your next dollar earned falls in that tax bracket, which is 37%. So, if we have and the 37% bracket starts at about just shy of 600,000. So if we have an NIL athlete who's receiving a contract with the collective for 500,000 and finds another 100,000 in endorsements or sponsorships, we need to let them know, hey, your first 500,000 maybe wasn't subject to the marginal rate of 37%, but going forward, anything that we earn will fall into that 37% marginal rate. So we really take pride in educating our clients on that standpoint. So it's a little overview of the industry. I'm going to pass it on over to my colleague, Zach, who will walk through some case studies.
Thank you, Tyler, for that background on the industry and some of the tax impact that we're looking at. I do have a couple of case studies to go through to helpfully drive home some of the points that Tyler was making. and give some real life numbers to that. So this first case study, to start off, if you've got something to write down on, or I guess we're all on a webinar here, so a notepad or however you do that, just make a guess for an NIL athlete set to receive $100,000 of NIL income. How much do you think they're going to be able to keep after taxes? There's a few, I'll give you a little bit of help, a couple of assumptions going into this. We're going to assume for this that no expenses are being reported. They haven't made any prepayments. We're just going to look at one state for simplicity, and we're going to assume that they're a single tax filer. So take a minute, write down your guess for that number, and then we'll be able to get into this slide here and walk through not just the income as taxable income, but also what various levels of tax it might be assessed with and how that walks down to the bottom line. Kelsey, can you go to the next slide, please? Thank you. Okay, we have a side-by-side here of $100,000 of NIL income with no changes, no adjustments. So this is just an athlete that received $100,000 on the course of the year, and that's all they did. But we have another example next to it that we'll get into it with a little bit more detail on what it might look like to work with Anthem or to work with a tax professional in this space. So first, I'll start by walking through in the no changes column what kind of tax we're seeing. On $100,000 of NIL income, we have to look at all of that income as subject to self-employment. In Tyler's portion and in the video, it mentioned that NIL athletes are really considered to be self-employed for tax purposes if they don't make any changes or make any strategy adjustments for their taxes. So if they're going to be treated as self-employed, they're going to owe self-employment tax. In this example, $100,000 of NIL income is going to show $14,129 of self-employment tax. Below that, we have our federal tax. That's the federal tax on our income. We all would expect to see that. Below that, we have our Oregon tax. So we have self-employment, we have federal, and we have state. And this is assuming that we're not somewhere that has a local tax. Across the country, there's a lot of local taxing jurisdictions that might want a piece of this as well. So in this example, we just have those three layers. And then beyond that, what we're left with, we still have underpayment penalties that need to get made, and then interest on that underpayment and on the tax. We're looking at some of this underpayment issue because on 1099 NIL income, we don't have any money withheld. So if you're a W-2 employee, when you make money, you might have your employer send some of that to the IRS, to the state that you're employed in to help cover some of your tax liability. That doesn't happen in the self-employed space. It's something that you have to go and make those payments on your own. No one's going to make that on your behalf in this situation. Moving over to the Anthem column, the difference is that you're going to notice right away. One, there's a CPA fee. So we've got some services that we look at offering. There's value to those services, and we're going to have a bill associated with that, just like working with any professional. And what we want to look as we go down that column is that by doing that, we can help strategize and plan better. So we can maybe be in a situation where we're not paying any self-employment tax because of some of the strategic decisions that we've made. We've got some deductions that maybe we can claim, so that's going to help reduce our federal tax and our state tax. We're going to have recommendations on making estimated tax payments, and that's going to save us money by not having us be subjected to the underpayment penalty and related interests. Some of the common expenses that we look at working with athletes, and this will be a good, I think, FAQ or Q&A time later too to go into more detail on some of these. But we look at things that athletes are probably already spending money on and finding avenues that we can deduct those for taxes. So just to name a couple, we have meals potentially, we have travel potentially. We've got agent fees if you're paying an agent to help represent you in this space. We've got your cell phone bill, retirement funds if you want to go that route and start saving for down the road. There are some deductions available, but it's going to take strategic planning to unlock those deductions and be able to claim them and support them on your tax filings. So all in all, the difference is that we see no change, just getting the $100,000. The athlete's only left with about 64% of their $100,000. So I don't know who was closest to guessing that when they wrote it down, but congratulations, you win a prize of being the closest, I guess. Working with a tax professional, you're going to be able to keep 77, 78%. So there's going to be a difference right there just by having that strategy in place. Kelsey, do you want to? Thank you. The next case study that I have to look at, we're going to keep it pretty similar, all of the same assumptions, but we're going to change the $100,000 to $200,000 of NIL earnings. So that should be pretty easy. Double the income, we're just going to have double the tax, right? It doesn't exactly work that way, unfortunately. And this touches back to what Tyler mentioned about the progressive tax system that we have. So in this case, we have the same levels of tax that we're being assessed to, but you'll notice that the penalties are getting bigger because we're owing more tax. The amount of federal tax, it more than doubled between the two. And the reason that it does that is because we've introduced a higher tax bracket. Our tax system is progressive, so as you earn more, your next dollar is going to be subject to a higher rate of tax potentially than the earlier dollars that you earned. That's something that we can help in our planning too. We at Anthem, we focus on compliance for taxes, so that's why we're filing in multiple states. That's why we're taking care of all of the 1099 matching that Tyler mentioned. We also like to focus on tax efficiency as well, which does take a deeper look at what rates we're being charged and how we can use our expenses and leverage them in a way to maximize our tax benefit. So in this example, you'll notice that the no changes column, a lower percentage is kept. It's down to 59% in our no changes column once we've doubled our NIL money. On the Anthem side, it's almost the same number. It's maybe a 3% difference, and that comes from our strategic planning. That comes from the planning that you're able to do when you're working with a tax professional in this space. And we encourage the athletes that we work with to have a circle of professionals around them. So obviously a tax professional is going to be able to help you maximize and be tax efficient in this area. A wealth manager is going to help you set yourself up for down the road. An agent that looks out for your best interests, it's going to cost you money, but it's going to be for your benefit as long as you're surrounding yourself with these professionals that you can trust in all of these different spaces. Just like whether it's football or basketball or baseball or hockey or any of these sports, it's a team effort there. We look at it the same way as putting this team of professionals together. It really is a team effort to make sure that the athlete's best interests are being preserved and that they're on a path to achieve the goals that they've set out for themselves on the financial side, on the professional side, anything off the field there. So those are the two case studies. If we get into the Q&As, we can answer more questions about them. The big takeaway here, though, is it's really planning ahead, focusing on cash management and tax readiness or tax efficiency. Those are the things that we want to be working with our student athletes on so that they're prepared and ready when it comes time to file their taxes, so that they're not surprised by it. We look at making estimated tax payments rather than paying the full bill. It helps on the cash flow side. It also helps reduce those penalties. It's a benefit all the way around. So next, it's going to get kicked back to Tyson here to run some FAQs, just kind of around the panel. And once we get through this, we'll have some time for Q&A.
So thank you, both of you. Before we actually get to these FAQs, and again, I saw a couple questions come into the Q&A section. Thank you. We will get to those in just a minute. But one thing that's not on the FAQs here, but I wanted to actually throw this question to Anne Marie. Anne Marie, are there any state-specific issues that we need to be aware of, whether it's legislation or these kind of things? How are the states handling NIL? Because a lot of what we've talked about so far has been on the federal side.
So super loaded question. I think legislation, like everything, is moving really, really quickly in the states, and I think we're trying to keep up with what that looks like. I noticed yesterday that in Oregon specifically, and that's where we are, so it's pretty easy for me to see what's going on here. There's a House Bill 3694 that is going through the legislature right now, which would actually, I think it's kind of surrounding the contracts that look to be coming with the revenue sharing, to say that those would be exempt from public disclosure. So we're going to keep our eyes on each state and kind of see at the state level what they've got going in that area, so that we bring that information to the table. I also just wanted to comment on something that Zach touched upon, which was, having a team that surrounds athletes. And I just wanted to reiterate, Tyler talked about, we've got attorneys we can refer to. We've got wealth management division as part of our company, but we also really respect if an athlete comes to the table with people in place, we're going to work 100% with those people. And if you need a referral to somebody, we can do referrals as well. But I wanted just to mention that we are really respectful of who you have surrounding you or an athlete has surrounding them, and we're going to work with them in a very collaborative effort.
Thank you, Anne Marie. And a couple of these, I think that we've covered. Do you have to file? Yes, but what happens, Tyler? What happens if someone doesn't file taxes? What are some of the things that could result from that?
Yeah, that's a great question. So in the event that you don't file, the IRS and potentially states that you play in, like mentioned earlier, will come hunting or asking, hey, the IRS will say, we received this 1099, maybe received multiple 1099s. The total of that income has X amount of tax liability, and it was due on March 5th or April 15th of maybe 2025, and you haven't filed. So there's a filing penalty, there's a underpayment penalty. So if you don't file, the IRS will let you know this is the income that you should have reported, and this is what you owe, and these are the penalties and interest that you owe for not filing or paying.
And yeah, one of the things that you find when someone's 2, 3, 4 years behind is that the interest and penalties can be higher even than the tax, and you can get to the point that you're paying 50, 60, 70% of what you had potentially by the time they add everything on top of each other. I think we covered a little bit. What is a 1099? Well, I received one in there. So one thing that I know when we get to talking about, and there'll be one of the things that we talk about a little bit later here also in sort of the Q&A, is the revenue sharing. Revenue sharing most likely is going to be reported on a W-2 because it's going to be coming from the schools, and we'll have probably some level of withholding and state compliance. But Zach, will a 1099 list the states that you played in or have any detail for you on that?
That's a good question, and the answer is no. A 1099 that you're going to receive, it's just going to report your non-employee compensation. So what you earned from your NIL deals, it's going to show that in a box. It's going to get reported to you. It's going to get reported to the IRS, and then it's going to be up to you as the taxpayer or us, if we're working as a team to work through this, to report those different states. And there's a couple different ways we can do that. So I think when we get into the Q&A piece, if no one else brings it up, we'll have a game where one of our panelists will ask another one a question to make sure that we can cover that topic.
Well, we have some loaded questions queued up. Is that what you're saying? Okay. Yeah, and I believe we covered, yes, if you are a 1099 NIL athlete, you are self-employed. I think you made that pretty clear in the case study with that. Last question here. When should I start planning? Is it too early to start planning? Is it too late to start planning? Tyler, when should someone start planning?
Yeah, it's going to depend per person. It's never too late and it's never too early. So don't hesitate to reach out. I would like to have a conversation with an athlete probably before they receive their first deal, just so from an educational standpoint, I can let them know what's coming. If you're receiving 2025 NIL income, we don't have a tax liability until April 2026, but I can get you going on estimated tax payments to cover underpayment penalties. So I guess the answer to that would probably be sooner the better. But don't think, oh, well, I didn't reach out last March, so it's probably too late. I'll always reach out, but preferably earlier the better.
It kind of reminds me of that question, when's the best time to plant a tree? 10 years ago, when's the second best time today? So don't hesitate. So let's talk about, Zach, you talked a little bit, maybe go into a little more detail, kind of the ordinary, necessary, and kind of walk through some of the expenses that we can look for.
Yeah, absolutely. So ordinary and necessary those are the exact words really to look at when we're talking about what expenses can be claimed. So we've already mentioned NIL athletes are looked at as self-employed, kind of a business owner in that sense. And in business tax, you need to have your expenses be ordinary and necessary for the course of your business in order to be tax deductible. And this is one of our favorite things to walk through with athletes because I think it can help reduce some confusion. It can help add clarity, and it'll get them on a right track to be able to claim some of the expenses that they're entitled to and reduce their tax liability. So we have talked with athletes previously where they'll tell us what kinds of things they're spending money on, and then be able to figure out if we can say that, yes, that is ordinary and necessary. I mentioned a few when I was going through my slides in the case studies, meals, agent fees, your cell phone. Those are some pretty common ones that we've been able to talk with athletes and figure out for your NIL licensing, what needs to go into that in order to maintain that, improve that, really promote that, because that's what you're in the business of as an NIL athlete. So looking through those things, we also need to make sure that we do have that business purpose with these. So if someone comes along and asks whether they can deduct a piece of jewelry, they got a necklace or something that they bought, we need to make sure that we're supporting that with a business use of that and taking that approach for determining whether or not these expenses can be deducted for tax purposes or not.
Awesome. And that was, I was actually gonna throw jewelry at you as a question if you hadn't covered it, because we get that as such a common question. I think we've covered the agent. Can we partner with them? Why use a CPA? I think you've done a pretty good job of examining that. So state and local tax, again, the comment about Florida, I just think it's important to make sure that people know and understand there's a lot of not so great information out there about some of the state and local tax issues. So just really making sure you're working with someone that knows, because if it sounds too good to be true, it probably is, because you are definitely subject to state and local tax. We ready to go to the Q&A? I don't remember. Do we have another set of Q&As? Okay, yes. Let's go to to the Q&A section. This is my favorite part because this is where I get to pick which panelist I send the question to and see if we can play stump the panelist. So okay, let's do Zach. Can you explain more about getting rid of the SE tax? What is kind of the process that we used there?
Yeah, that's I can take that one, and that's a really good question. So thanks, Thomas, for asking this one here. The SE tax is assessed for someone self-employed. So if the athlete gets an EIN and then that's it, or if they don't get an EIN, they're taxed as a sole proprietor on their personal tax return, and that's where the SE tax flows in. One of the strategies that we've taken is setting up an S corporation for the athletes to maintain the NIL rights for them, so to speak. And by doing that, by taking that strategy, we are able to eliminate the SE tax that the athletes are assessed, and instead they become employees of their own business. So we'll set them up, have them on a payroll plan, and there'll be some payroll taxes assessed on that, but we'll be in control of that number much more than we are in control of any kind of SE tax that gets assessed. Hopefully that answers your question. Tyson, you can fill in any blanks that I may have skipped over.
Perfect. I think that was good, and it answers. Andy asked a question about what happened to the SE. Are they no longer self-employed? So I think that kind of answers that piece of the question as well. The second part of that, I'm going to actually throw to Anne Marie. What is the method of cost? Want to kind of explain how we charge for things?
So we will have kind of a 2-meeting approach with each one of the athletes, which is on our dime. We'll sit down and kind of hear with the athlete and their parents, or the athlete, their parents and their agent, or the athlete, their parents, their agent, and a financial planner, and kind of what the athlete's trying to accomplish. Everybody makes a different level of income. Everybody has different thoughts. They may be wanting to start a clothing brand. They may want to invest in real estate. So we need to have a real clear understanding of how much revenue an athlete is getting. We need to understand what they're trying to accomplish. And then we will come back with, here's kind of the strategies that we think would go into place, and here would be the cost associated with that. And then you can make the decision to work with us or not. I think one of the things that we've committed to as a firm is that we like to keep this really, really cost effective for athletes, because we understand that everybody is kind of in a different place in terms of how much revenue they're generating, but the strategies we would lay out, and it would be very clear on what the cost for those strategies would be. And then we try to keep the cost on the compliance work to a minimum. But we have staff as well that we need to pay, but we want to do this the right way and not take advantage of people. So very, very transparent process, and you have the ability to say yes or no.
Excellent. Thank you, Anne Marie. And by the way, Scott, we'll get to yours in a second. I'm going to answer a couple of others of these. So just wanted to let you know that I'm not avoiding it. So Sam, yeah, go ahead, Anne Marie.
I know you got it. It's down to Sam's question, and I just wanted to, because I had a recent conversation with the owner of a collective that I have a very close relationship with, and I don't know yet that they really know for certain on the 1099 versus a W-2. I think his thought is he's leaning more that it's going to be on a 1099 and not a W-2. So I'm going to watch that really closely. But right now, I don't think there's a clear answer on that.
Yeah, I agree. I've seen both ways. And here's what, if I was a betting person, I would bet that it ultimately is going to come down to W-2, because I think when when they run it through all of the are you an employee or an independent contractor rules on the federal side, and then start looking at the states and how each state works, that they're going to ultimately fall in the W-2 category. But it is a little bit of speculation at this point, in that, but I think probably W-2 is, and yes, I don't think it would be on their 1098, but again, that's a great question, and some of this is still to be determined, but we'll see. And that actually kind of leads in, and that's kind of why I wanted to take it in the order, because you'd asked the 1098 and kind of how it applies with financial aid. So, Zach, do you want to try and answer Scott's question here on, what's the how does NIL affect their scholarships, their tuitions, all of those kinds of things?
Yeah, thanks, Scott, for asking the question, because the Alston money has come up quite a bit with the athletes that we've worked with. So I'm going to tackle this one, I think, in a few different parts, starting with the Alston money. So that is funds from the university for education, basically. In that case, if you're using those dollars for education, the Alston money isn't going to be, it's not all of a sudden going to be taxed now that we're in an NIL space. As long as you're using those funds for what those funds are intended to be used for. So if you've got the dollars that are supposed to be used on textbooks and other educational materials and other campus living things, and that's what you use it for, then the Alston money is done, and it's not going to hit any of these tax calculations. When it comes to how scholarships can be affected, the NIL money is going to be earned income, so it can impact some scholarships that are indexed or that are based on how much income you're reporting. So if you have a scholarship that is at a certain dollar amount because the income that you're reporting is below another dollar amount, that can be impacted by your NIL earnings. Something important to keep an eye on. The collectives that we've worked with have used the NIL mechanism to make athletes whole, so to speak. So if they are getting NIL money that is kicking them out of a scholarship bracket, they've been able to work with the collective has been able to work with that athlete to find some more NIL opportunities for them to make up for the lost scholarship potentially, or for some of the tax that might be due if that scholarship is being replaced by NIL money. Replaced is maybe not the right word to use, but as far as the dollars go, that's how we've seen it impact scholarships.
Excellent. Well done. Thank you, Zach. Okay, Bill asked a question. Can you restate the agent partnering again? Tyler, you want to kind of talk about that?
Yeah, absolutely. We'd be happy to work with any agent that a NIL athlete has. We wouldn't overstep them in any way. We'd kind of be there to assist them with any tax-related compliance questions. But outside of that, that's the only role we would have with the relationship. We want the agent to be the agent. We want the agent to represent the athlete and such. But we would just be there to assist them with the compliance, and that'd be our role in the relationship.
Yeah, so the only other thing I would add to that is just kind of as we're talking about the strategy, there are different opportunities in how things are structured, and so working with the agents to say, hey, if there's these opportunities, is there a more tax advantaged or a more business advantaged approach from our perspective, and kind of walking through so that we're kind of putting the whole picture in place. Let's see. Jason asked a question on international players. So I'm going to cover a piece of this, and then I'll throw it. I was going to say I'll throw it at Sarah just to see what she has to say, but I think I'll throw it at Zach. But so one thing to keep in mind is that, the United States taxes people on their global income. And so if they're an international player playing here, they're going to pay tax on this money stateside just as a domestic player would. And so that's one thing to keep in mind. And then as far as the international side of things goes, each country is different. I don't know, Zach, if you have anything you wanted to add to kind of how we could work with that.
Yeah, I think you summed that up well. The most important piece is that we are having to look at multiple taxing systems. In that case, we are going to have to deal with US taxing global income or worldwide income the way that they do. And I don't have specific experience maybe in international tax, but we would be able to help athletes on the US side of that. And then they'd have an international component that they would have responsibility to as well.
And we do have connections with BDO, which is a large international firm that if people had needs on an international tax side, we could definitely connect them and help them get that taken care of. But we do see athletes coming in from all over the place that are starting to get NIL funds now. So it's a great question. Thank you. Let's see. Since you went, and I'm going to throw it back again to you. Boy, I feel like I'm leaving Tyler out of this, but Zach, Thomas asked a couple questions on the S Corp. Since you kind of walked through that, how that would work, why don't you go ahead and answer his couple of questions there?
Yeah. Thanks for asking another question, Thomas. I love having the chance to explain a little bit further, or maybe dive a bit more into this to help answer your question. Unfortunately, the answer is it depends as far as how much it would lower it. Because we are looking at different factors, how much expenses they have that they can claim, how big their NIL deal is, how many sources of revenue they have. So the short answer is the strategy that we've employed to set up S corporations to reduce self-employment tax. We've used it in situations where we've mathed that out to show that it is going to reduce self-employment tax. If we're in a situation where we don't think that's the case, we're going to work on that specific situation and make a different recommendation potentially. All of our strategies that we work with athletes on are personalized because this is a very personal situation. So we wouldn't make the recommendation to go that route if we didn't feel like the math supported that as far as tax efficiency or tax savings goes. And if you've got a specific case in mind, or if you wanted to talk more about that, we'd love to have a meeting with you after the webinar, get some time on our calendars and chat with you about the specifics of that strategy in your situation.
Thank you so much. Sorry, I was just responding to Bill. I thought that was a good question just to put in the chat itself. Let's see. Keep flipping through. So one thing just to touch, we haven't dealt with the international NIL deals, and part of that is because there's questions with how it works with visas and this kinds of things. And so, I'm not sure if Jonathan asked the questions about banking, this kind of thing. We can speak to how it works with other international folks that are here. Specific to NIL, I'm not sure. So I think I'm going to kind of put that question on pause just because I don't know the exact answer. I don't think we know the exact answer on that. Mike, I run a Division III collective. Ooh. Anne Marie, you look eager to answer Mike's question there on Division III collective.
I think we would love, and we have done where we go in and speak to athletes that are within a collective, and we educate the athletes and the owner of the collective. We've done it at the Division I level. I feel very confident we could have the conversations with you, Mike. So please feel free to reach out and we could work out putting together something for you on an education piece.
Thank you, Anne Marie. Mark asked, Zach, you spoke about payroll taxes. Are we giving the athletes a salary? So you want to just kind of walk through that again?
Yeah, that's a good question, Mark. And when we are looking at some of these strategies, if we do pick the route for an S corporation being the right choice for their tax situation, then we would have the athlete be self-employed in their S corporation. So we would have a salary come to them. As far as only payroll taxes coming out of it, maybe yes, maybe no. It depends on what else we're partnering that with. If we want to look at paying taxes through withholdings in that manner, then we would have federal or state taxes withheld as well. If we're looking at retirement contributions, we might have self-employed mechanisms like a SEP, or we might have a 401k or something like that coming out of it as well. So there's a few different strategies that we can employ once we get into that S corp self-employed payroll space, but we would have them set up to earn a salary and to keep them compliant with what they would need to do as an S corporation.
Thank you, Zach. Let's see. Andy asked a question. Are non-NIL compensations reportable and taxable, such as tuition, housing, training, nutrition, over a certain amount, maybe? Tyler, you want to chat on that?
Yeah, I can take care of that question. So the only taxable portion of a in that sort of compensation would be like a housing stipend. If they were given a portion of cash to use towards housing, we would report that as taxable income. But in terms of tuition, that's a non-taxable event to the recipient of the compensation, and then training and nutrition is considered a de minimis fringe benefit. So that portion would not be a taxable event.
Tyler, do you want to talk about if they got a vehicle in an NIL deal? You kind of talked about housing, but just that would be a good add-on to that.
Yeah, no, that's a good point. Thanks for mentioning that. We've had NIL athletes that received a vehicle as part of their compensation. And unfortunately, the athlete picks the fair market value of that asset up as income on their tax return, which is an important discussion to have because, if that is your one portion of compensation, what cash are you going to use to pay for that tax? So I think that is an important negotiating deal when it comes to receiving non-cash compensation, is how we're going to pay for the tax.
All right. Brad asked, is there a minimum amount threshold for NIL money coming in before an S corp and avoiding SE tax makes sense? I'll go ahead and kind of cover this. Yeah, each situation is sort of specific and unique. At some point, the cost and complexity of having the extra entity isn't such that it makes sense to. We do kind of walk through again on a player by player, situation by situation basis. There may be some reasons other than tax purposes that an athlete would want to do that. Which may change the threshold. It also may be that they would anticipate things where their income is going to bump up in the next couple of years and they want it in place, so that there's a wide variety. But yes, if someone's making $5, $10, $15, $20,000, entity structuring doesn't make sense. You're looking at other mechanisms to reduce it. One of the reasons that people will do the entity is how it potentially can affect the ability to maximize their retirement contributions. One of the things that we didn't really cover that I think is a huge opportunity for athletes that are making a larger dollar amounts is really the opportunity to set, in some cases they can put $150,000 aside into a retirement plan at age 18, 19, 20, and what that looks like down the road for them when they get ready to retire. And their college years really do set them up for retirement, not just what they're taking in school, but these funds. And so I think that's really a critical thing to point out. So I think we've basically covered the Q&As that we have. We have just a couple minutes left here. Wanted to make sure that we threw out a thank you so much for everyone that took the opportunity to join us. It was a fair amount of time, we know, and so we really appreciate that. If you have other questions, you see our contact information. We would love to hear from you. If you're an athlete or an agent and have follow-up questions, that you want some very specific answers to your situation, again, would love that opportunity as well. And again, I just want to say a shout out to the panelists for joining us as well, and their expertise, and Kelsey and Sarah for putting this together. So thank you all very much. Any other last words, Anne Marie, Kelsey, anyone before we leave?
I wanted to thank NIL Wire for partnering with us again.
Yes.
They're a great partner to work with, always great information. I read their newsletter every day. So also just thank you to them.
Yes, thank you so much. I was remiss in not mentioning that. So thanks all. Have a great rest of your day.